if we are talking about the infrastructure projects, you more or less get some kind of debt finance from the Chinese banks. You might be able to get a little bit of the minority, or gradually we are seeing the majority of the equity, in the project. Then you got the Chinese suppliers, mainly, as the EPC contractors. They're gonna source, globally, either from UK, US, or China for the best equipment. Then, eventually, usually the O&M side is from the local partner, but sometimes the Chinese is also be able to get involved on some of the O&M, So it's more about the Chinese equity, Chinese contractor, potentially Chinese equipment supply. But then, of course, they all are, local job creations. If we look at some researches, we've seen some of the local jobs are created for the African people too. But given probably the Chinese banks are dealing with these Chinese contractors already in China, so more or less they know, whether they can deliver, according to the requirements by the sponsors. So as a bank, typically, financing a big infrastructure projects, we need to know the track record from the contractors. Then we need to know the track record from the sponsor or the developers. Then we need to analyze the cash flows, to see whether there are sustainable cash flows, service the debt or interests, So usually, maybe for the first 3 or 5 years, during the construction, there are not sufficient cash flows. There might be a, capital grace period.